This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masteringencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hey everybody, Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly update about what's going on in the marketplace. This is sponsored by Mastering Encompass. Head over to masteringencompass.com if you want to know everything there is about the Encompass platform. It's an open and free community. Everybody can join regardless of where you work. So why not join? It's open for processors, underwriters, everybody along the line, sales, administrators, executives. It's where we've been able to pull together all the greatest conversations and all the greatest information for you to know exactly what's going on, especially as Encompass continues to change. If you are going to the ICE experience in Las Vegas in March, we'll be there. We are booth 14. We still have 7 open spots as of the recording of this session here to make sure that you can get a spot in the wrap-up show. It's still $750, which is a great deal considering everything that you get for that full day of workshops. So join us everywhere that you can. We'll hopefully see you soon. This is for the week of January 27th, 2025 in review. Gang, unfortunately, the Fed held rates steady, inflation aligned with projections, and low existing home inventory boosted signed contracts for new homes. Here's some of the stories we're going to be going through today in this recording. First one is Fed presses pause on rate cuts. The next story is Fed's favored measure of inflation meets forecasts. You should know what that is by now if you've been watching and listening along here. The new home sales exceeded expectations. We've got the next story of pending home sales experiences the first decline since July. The next story is national home prices reach new heights. We also have an also of note to be interested in. Hopefully that teases you a little bit. We've got a family hack of the week to talk about, and then of course we're going to talk about what to look for this week coming up. First of all, the Fed presses pause on rate cuts. Following a series of rate cuts in September, November, and December, the Federal Reserve held rates steady, maintaining its benchmark Fed funds rate between 4.25% and 4.5%. This pause on further rate cuts was expected, of course, and the vote was unanimous. Go figure. When the Federal Reserve raises or cuts interest rates, they are adjusting the Fed funds rate, which is a short-term overnight rate that the banks use for interbank lending, that lending between banks, not between you and me, between banks. This benchmark rate serves as the foundation for all other interest rates, though it's not directly tied to mortgage rates or long-term rates, just so you know. So the bottom line in this story is the Fed began aggressively raising the Fed funds rate, remember, back into 2022, and it was done to combat crazy surging inflation in the post-pandemic era. However, they started to cut rates last September, that's September of 24, due to moderating inflation and rising unemployment. The Fed's decision to pause further rate cuts this last week was partly due to the slowing progress towards their 2% inflation target. So the idea is kind of a soft ease into it, not a up and down, because nobody likes the up and downs when it comes to interest rates and market conditions. After the meeting, the Fed Chair Jerome Powell emphasized that the Fed does, quote, not need to be in a hurry to adjust our policy stance, close quote. Future decisions regarding rate cuts, of course, will be heavily dependent upon upcoming labor and inflation data. There you go. That brings us into the next story. That's the Fed's favored inflation measure meets forecast. So we see on screen here the Fed's favored measure, which is the personal consumption expenditures. There you go. And here's the story. The Federal Reserve's preferred inflation measure, personal consumption expenditures, PCE, met expectations in December. The headline PCE rose 0.3% from November, with the year-over-year climbing from 2.4% to 2.6%. The core PCE, that strips out volatile food and energy prices, that only increased 0.2% monthly, while the annual rate held steady at 2.8, near the lowest level in over 3 years. So the bottom line in this story, of course, is shelter costs, which comprise 18%, 18% of the core PCE, that plays a critical role in progressing towards that Fed's 2% inflation target. While shelter costs in the PCE have been elevated when compared to more real-time rental data from places like Apartment List and CoreLogic, they have started to align more favorably in the government's report. As per the PCE, as the PCE gets better and it reflects more of real-time information trends from the rental market, which can be softer right now, annual inflation readings should decrease. That's the hope. We'll have to see what happens. Here's the next story. New home sales exceed expectations. So we see that in December, the signed contracts for new homes increased by 3.6% from November, reaching a pace of 698,000 units, significantly above estimates and the highest since September compared to December of the previous year. Sales rose 6.7%. It's a pretty big number. Bottom line in this story is the combination of historically low existing home inventory and stronger buyer demand has driven the rise in new home sales, despite elevated mortgage rates. So, however, more inventory, of course, is needed, and it's needed to satisfy the ongoing buyer interest. Of the 494,000 new homes available at the end of December, it's important to note that only 118,000 of those homes were actually completed, where the remainder were either under construction or just dirt. They're not even started. So we need more supply to try to keep these prices moderating. We'll get to that in a second. This next story is all about that continuation. Pending home sales experienced the first decline since July. So after rising 4 straight months, pending home sales dropped 5.5% from November to December per the latest report from the National Association of Realtors, also known as NAR. This metric reflects signed contracts on existing homes as opposed to new construction, typically occurring 1 to 2 months prior to closing, and serves as a leading indicator of housing market trends. What's the bottom line in this story, gang? The NAR chief economist Lawrence Yun observed that, quote, contract activity fell more sharply in the high-priced regions of the Northeast, which is where I live, coincidentally, and the West, which is where I have some friends living, where elevated mortgage rates have appreciably cut affordability. Duh. He also noted that, quote, job gains tend to have greater impact in more affordable regions. It is unclear if heavier than usual winter precipitation impacted the timing of purchases, close quote, aka the weather might have stopped them. We'll see. We'll see. Let's get into the next story where national home prices reach new heights. It feels like a broken record. Every month we feel like prices are going up and up and up and up and up. The Case-Shiller Home Price Index, widely regarded as the benchmark for the measuring appreciation in home values, revealed a 0.4% increase in home prices nationwide from October to November after seasonally adjusting those values. This marks a new peak, surpassing the previous month's record. It's important to note the year-over-year home values in November were up by 3.8%, building on October's 3.6% rise. It's crazy. In particular, the 10-city composite index, that reached a 4.9% year-over-year increase, while the 20-city index saw a 4.3% uptick, indicating that major urban areas are growing even faster than the overall national trend. Similarly, the Federal Housing Finance Agency, that's the FHFA, that house price index reported a seasonally adjusted increase of 0.3% from October to November, with prices 4.2% higher compared to the same period last year. It's important to note that the FHFA's index differs from Case-Shiller's index as it excludes cash buyers and jumbo loans, meaning loans that exceed the FHFA's limit, focusing on conforming mortgage financing. Now, I always say this, but the FHA's limit now is like $800,000 to well over $1 million. So, there's that. Bottom line in this story, gang, is homeownership remains a robust opportunity if you can afford it for wealth creation. For example, if you purchase a home for $600,000 and it appreciates 4% within a year, you can see a gain of $24,000, reflecting a solid investment return, only if you sell it, right? Hey, here's a little adder here. Here's something also of note. The initial estimate for fourth quarter 2024 GDP indicates that the U.S. economy grew by 2.3%. This comes after growth rates of 1.6% in the first and 3% in the second and 3.1% in the third quarter last year. The increase in economic activity during the fourth quarter was largely fueled by rising government and consumer spending, although this was somewhat tempered by a decline in investment. the idea here is to keep in mind is that the data may be revised when the second and final estimates are released in the coming months. Remember that each GDP has three numbers at three different times: the initial, revised, and final. So when we turn to unemployment, the latest claims data, where the initial was losing 16,000 to 207,000, continuing was losing 42,000 to 1.858 million, suggests that the labor market continues to maintain its current trend, with employers retaining their staff while also exhibiting a cautious approach to hiring. Now, I can tell you personally speaking, as a small business, we are absolutely retaining our employees, and we are actually taking a cautious approach to hiring. It's true. Very, very true. All right, gang. Family hack of the week. Who wants in the Super Bowl? Who wants Kansas City? Who wants Philly? We'll see who wins. I'm always rooting for the Cowboys. That ain't happening. We'll see what happens there. In the meantime, I'd love to see a great game. This is a recipe. If you're watching on screen, this is a recipe for an easy chili recipe from the Food Network. Go ahead and get to here on the video, and you can check out the recipe if you're interested in that. And while you're doing all that, we're going to talk about what to look for this week coming up. We've got a week packed with reports related to the labor sector. We've got job openings on Tuesday, private payrolls Wednesday, unemployment claims Thursday, and non-farm payroll and the unemployment rate Friday. All this is going to tie directly into the bond market. Obviously, there's going to be a ton of things happening politically speaking, so who knows what's going to happen? Your guess is as good as mine. But the one thing I can definitely rely upon is all the information at Mastering Encompass. If you're interested in learning everything about the Encompass platform, it's where you go. So, it's a community that I help build, but really it's only there because everybody else is contributing towards phenomenal conversations and insights that everybody benefits from. So I hope to see you there over at Mastering Encompass. And again, we're at booth 14 at the ICE Mortgage Technology Experience 2025, Las Vegas, between March 10th to March 12th. And then we have the wrap-up show on March 13th. I hope to see you there, and take care. Bye now.